What you're looking at here is non-business debts, loans, liability level. So why are the corporations doing so well? Well, they're doing it because, as you can see, they're doing it with borrowed money. Whether you're a government, a corporation, or an individual, it all works the same in the end. And you know those big tech companies that were always so cash rich? Well, they've been taking on more debt as well, just to fund themselves and what they're trying to do. Now, what you're looking at here is what's happening in interest rates. Remember, bonds or debt are guided by interest rates. And I've got to show you something really, really bad. I'm sorry, you guys, but the 2-year, the 10-year, and the 30-year yields have all broken out. Can you see that? Technically, what that means is that interest rates are more than likely going higher. And investors are looking to be paid more for the level of risk that they're actually taking. This is not good with all of that debt that needs to roll over, all of that debt, that new debt that needs to be taken on at these higher rates. This, my friends, is probably the single most important chart that I'm showing you today, because it's really showing you that we are in deep doo-doo, that all of this debt, the consequences are now happening. So yeah, they may be partying on the stock market like it's 1999, but this is an early warning signal that the markets are not having it. The bond vigilantes are back. And how does that impact consumer sentiment? Well, inflation, right, means that people have to spend more just to maintain their current standard of living. And the level of inflation where they have to borrow in 4 easy payments just to feed their family, that doesn't make them feel confident in the future. But hey, there you go. There is your tale of two cities. And it's really, really obvious, because what's holding this together really is that consumer confidence. But don't worry, because look at the earnings. These corporations are making more money than ever. Yes, inflation benefits them. But hey, surprise, U.S. inflation officially rose 3.8% in April, eroding people's paychecks. That's the CPI. That's the inflation, and that's official. Do you think that's real? Because I don't really think it's real. They jury-rig things so that it looks better. But quite honestly, since 2021, actually since 1913, if I'm going to be real about it, by design, U.S. wages never keep up with inflation. Nominal wages, maybe, but quite honestly, you can see that in real terms, the average workers are losing ground. And this is extremely important, because Main Street does not live from that asset appreciation. The 1%ers do, but Main Street does not. And so if you look at that bottom purple line there, after inflation, real average hourly earnings, is it any wonder that people are suffering? Because frankly, by design, when inflation raises faster than wages, living standards begin to decline, or individuals take on debt to accommodate it. And to be honest with you, inflation pressures, well, they seem to be escalating to me. What do you think? Here's the PPI, the wholesale inflation numbers. So these have not yet trickled through to you. But producer prices matter, because businesses eventually pass many of these higher costs onto the consumer. And don't worry, we got to protect their profits. But that means that inflation pressures can continue building underneath the surface of the economy. And we can't see it yet because it's still in producer the producer price index. That will come down. But look at this. This 6% print has triggered a very important pattern shift. Let me show you what I mean. There you go, guys. This chart shows producer prices breaking out just like those interest rates were breaking out to the highest level ever. This is important because commodities sit near the beginning of the economic chain. And you can have these paper prices, they can hide a lot of ills until they can't, because when raw materials costs rise, those higher prices, they've got to move. And where do they move through? Manufacturing, transportation, food, every single aspect of the global economy. And that's why I say this is all just heating up. But this is a very big deal because this is another breakout, and it creates even more pressures on households. And certainly this is all reducing your purchasing power. And at the same time, higher interest rates mean that the bond vigilantes are beginning to notice this inflation risk, just like I showed you. But what about the craziness happening in the gold and silver markets? Because all of you are going, well, why isn't gold rising? Why isn't gold rising? And why isn't silver rising? Right? Well, we're looking at the spot contracts, but let's just take a look at this, because stronger than expected rise in consumer and producers prices raise concerns that the Fed may need to increase interest rates in the short term. Okay, so while I know that people watch the spot gold and silver market and think that that truly represents gold and silver, it's understandable because that's what we were taught. But like inflation, paper markets dictating the price, well, frankly, that's all by design as well. And they admit it. It's not me just saying it or pulling it from some airy-fairy site. You read when they set things up, and they admit that all of this is by design. And even though that's in the process of shifting, we've been talking about that since almost a year and a half now. Wall Street logic is this. Why would you hold gold? It doesn't pay interest. Bonds, debt is better. Well, gold doesn't have to pay interest because it runs no counterparty risk. It is the single safest thing that you can do, according to the Bank for International Settlements, which is the biggest bank. It's the central banker's central bank, biggest bank in the world. So in theory, bonds or debt is more attractive for investors than gold and silver because bonds pay interest. But I'd like to ask you this little question. This is my $10 trillion Zimbabwe note. If I had a bunch of this debt and it paid me a bunch of this, can you tell me what good this would do? Because frankly, 1 trillion times 0 is 0. So let's look at what's happening on the technicals, because these are contracts, right? And you can kind of see a wedge forming here. This is just a 1-year contract. Now, I would like to point out to you that it's substantially higher. The silver spot contract is substantially higher today than it was just 1 year ago. And if you recall in our conversations, I said there are a few things that can happen. And one of them that's happening is that the spot silver contract is staying inside of that narrow range, giving that 200-day moving average an opportunity to catch up. But look, it's still 18% above that 200-day moving average. That doesn't mean overvalued. It does mean overbought, because they can create as many contracts as they want without limitations. So it doesn't reflect the true fundamental value of an ounce of silver. But, last week I showed you that how during this period of volatility, some very large players are standing for delivery on those silver contracts. So let's take a look at it because that's what you're looking at. This is the 6-month silver contract. Now you can see there's a lot less silver for delivery out, isn't there? Okay, but in the meantime, silver prices are more volatile because they are telling you that there is a major shift that is going on. Here's the technical chart on gold, the 1-year spot contract. Again, I will point out that substantially higher than it was, the contract is just 1 year ago. And we're still 5% above the 200-day moving average, which means that the spot gold contract is no longer overbought. But you can see how it's creating that wedge, like a wedge of cheese, right? And we'll see if it breaks out above or below. And all of this is just from paper contracts, not the real stuff in both gold or silver. And remember, everywhere around the world, the global central banks are accumulating gold. This is the 6-month COMEX gold. Can you see that somebody's taken delivery? Somebody is taking delivery. Even with the price pullback, and I can't tell you exactly what those contracts are because I didn't put that data in there, but is all of this volatility about keeping you away from buying gold? Because ETFs, technology demand, physical buyers, this tells us that it is a structural trend, not just a short-term trade. Around the world, retail investors were drawn to gold's price momentum and safe haven appeal, driving bar and coin demand up 42% year on year. So I want you to keep this in mind, that those paper contracts, that's one thing. But bar and coin demand up 42% year on year. Demand in China surged 67% year on year, considerably higher than the previous quarterly record. And by the way, do you really think these central banks are going to be honest with us about what they're really accumulating? Because other Eastern markets, including India, South Korea, Japan, also saw an increase in bar and coin buying, contributing to the ongoing structural shift in gold demand. Bar and coin demand was also supported by strong growth in the US and Europe, up 14% and 50% respectively. Can you see the difference between the contracts and the physical markets? Right? You and I are not working in the contracts because they don't mean anything. That's all counterparty risk. But we live in the real world. And what you're looking at here is that bar and coin investor demand. So I want to begin with the tale of two cities again. We began with that, and let's just take it to conclusion. Today, I believe, there's not one doubt in my mind, that we're living through a tale of two economies. Wall Street experiences asset inflation. Woohoo! Party, party, party! Main Street experiences life inflation. And what's really interesting to me in this is, in my generation, we were taught to accumulate assets. And frankly, those assets did me, thank goodness I had them. There were times in my life when if I didn't have them to sell, to feed my children or other circumstances, what would I have done? But these new generations that are coming up have been taught to collect experiences. Well, you cannot liquidate an experience if you get into trouble. You can leverage that experience for other things. But one of the side of the economy benefits from using those financial assets. The other side struggles with rising everyday costs, expenses, and that pesky inflation that impacts that declining purchasing power. And as debt rises, inflation pressures continue, and confidence weakens more people are turning back. This happens every time to physical gold and silver. Because in the end, real wealth is not measured by how high a market can rise. That can be absolutely nothing. Real wealth is measured by surety in food, water, energy, security, barterability, wealth preservation, community, what we're doing here, and shelter. And so that's why I love my Tuesdays, because I get to spend them with you. And you guys are what makes me feel really wealthy. And so now we'll take some questions. Okay, David asks, how do I go about creating a local barter system using silver if our government imposes a CBDC or some other cryptocurrency system which can track every financial transaction? Well, when you're bartering, and there's more to that, but let me just do one at a time. You're bartering outside of the system. So the CBDC wouldn't even come into account for that. Like, for example, if you were to come to my farm and you were to work, you give me a day's labor, you're going to walk home with probably eggs and whatever else we have that we're harvesting at that point. Well, that's bartering. I'm bartering for your labor. It's not going through the financial system. Now, if you work for me and I write you a paycheck, that one is going through the financial system. But the bartering on a local basis, that's not going through the financial system. So that's how you find a group of like-minded people. That's why I say, go to a farmer's market, go to a community garden, get to know who grows your food, give them a day's labor, create that relationship, and now you're bartering, and that is outside of the system. That's why you got to have surety in all of those areas, because if you don't, you will have no options and you will be a slave. What this does in your possession is it buys you freedom, right? Because everything is not going to evaporate. And by the way, too, it is one of the reasons why I like the pre-33 gold, because it's in a different category. I don't want monetary gold. Monetary gold is what they screw with all the time, and they can take away, et cetera, et cetera. This is not classified. I mean, it was money, right? This was a $20 gold piece that was used, but it's not, it's outside of that system. It's outside of that system. That's what gives me a higher level of comfort, because I saw my Uncle Al accumulate like at least 3,000 ounces of gold when it was illegal to hold more than 5. But he was doing it perfectly legally with this. Okay, number 2, if every transaction will be tracked under a CBDC type system, what is the exit ramp for our precious metals without the government being aware of the transaction? If we allow that, there is nothing you're going to be able to do other than local bartering. There is no privacy. There is no privacy. That's what I can say. And look at what they've been doing for a very long time, is getting us used to giving up all of our privacy. So yeah, that's not okay with me. But if we have redeemable gold in the monetary system, we can demand our power back. If we don't, then that's what you're going to get. You're going to get full trackability. And for governments, what do they say? Woohoo, now we can charge lifetime taxes. And if all of your wealth is held in the system and they have full access to it and they can cut you out from it, I mean, that just makes the sound money strategy, including all of the rest of the mantra pieces, that much more important. Can you see that? I'm not rolling over. I'm going to have to deal with whatever it is that I'm going to have to deal with. But I'm not going, oh, okay, here, you can have all of my privacy. You can have all of my wealth. You can have all of my work. I'm going, no, you can't. And I'm trying to fight it. And that's why we're a community and why it's so important to get redeemable gold back in the system again. Join Citizens for Sound Money. It's a global movement. Let's make this happen, because otherwise what you're talking about, David, and everybody else before that, right? Is that the kind of world that you want to live in? Is that the kind of world that you want to leave to our children? Because what opportunities do you think that your children are going to have? We live in a bifurcated world right now. That's allowed and enabled and encouraged because of this. Because winners and losers are chosen. In a world where this puts restrictions on how much money can be created and how fast you and I can be abused, it doesn't happen. Let's take our power back. I'm not rolling over. Are you? So nobody really lives a life unscathed. And there was a period of time that was quite rough for me. And so I was in a very deep depression for about 3 years. It's the only time in my life that happened. And I lost my faith. And I had to go someplace where I could not speak the language and nobody knew me because I was too busy looking over my shoulder when I was here. And so I went to France. I had a backpack, lots of stuff that I thought that I needed in it. And I had a bicycle and I had a very limited amount of money. And I brought a tent, a little 2-person tent. The girls got out of school. I put them on a plane to their father, and I went to France. And I went to France to try and figure out why I was on the planet, because I thought I knew. I'm so guided, and I did what they told me to do, and it didn't do what I thought it was supposed to do. And so I'm camping, and it was toward the end of the trip, and I had no money. I go over this rise, and there is this hill, and there's like a massive field of wild strawberries. And the strawberries were my very favorite. Oh my God, I love wild strawberries. They're so good. And so I parked my bike and I go up and I eat my fill of these wild strawberries. And then I packed a bunch of them in plastic, and that was going to be my dinner that night. And I happened to glance down the hill over here, and there was a white car that was parked down there, and a man and a woman in there. And I would guess they were probably somewhere in their 60s. And at that point I was like 38. And so I thought to myself, well, why aren't they up here participating in these strawberries? Because they're like the best thing you could ever put in your mouth. But my nature being what it is, I picked a couple handfuls. Remember, I had all I needed to eat, and I had my dinner set up for the night. So I picked a couple of handfuls. Now understand that I was camping out and I was bathing in streams, right? So I had 2 changes of clothing. So it probably didn't look very good. I'm not even sure that I smelled very good, if I'm going to be honest about it. But I go down to the car, and the woman was on the passenger side. And I said, would you like some wild strawberries? This was all in French. Would you like some wild strawberries? And she said, no, thank you. Would you like a cheese sandwich? And I thought, cha-ching, protein. And I said, well, yes, I would. I would like a cheese sandwich very much. And they had this picnic basket in the trunk of their car. And so they gave me a cheese sandwich, and I ate it. And then she says to me, would you like a cool drink of water? Well, I would fill my water bottles up in the little artesian wells as I would go through the villages, and it would get warm. And I said, yes, I would like a cool drink of water. Thank you very much. And they gave me that. And then she said to me, would you like an apricot? Well, I'm going to tell you, if you saw an apricot on the side of the road, it was in a fruit stand, and I did not have money for it. And I love apricots. And so I said to her, I said, well, yes, I would love an apricot, but it's not necessary. Why are you doing this? And that woman looked me dead in the eyes, like she was looking into my soul. I'm getting chills. I'll never forget it. I'll never forget how grateful I am to this woman, because she said to me, "You wanted to share what you have with us. We want to share what we have with you." That was my moment of clarity, because I realized that we are all here to share the gifts that we are given, whatever they are. And I've been given a lot of gifts. That's why I'm here in front of you. And that's why I work so hard on your behalf, because I'm sharing what I have to give you. And I got news for you. It doesn't just go one way. You guys showing up here and participating and asking questions and coming together in community and trying to help your family and your friends understand about sound money, I get so much more from you than you could. I don't know if that's true, but that you could ever give from me. But this is why I work so hard for you, because that's why we're all here. We're here to share the gifts that we have been given. Let's make a real change and a real difference in this world. And 100%, I know we can do that. So until next we meet, wherever you are in the world, please be safe out there. Bye-bye.